Everyone to our Empowering Entrepreneur webinar series hosted by Select Fulton. My name is Samir Abdullahi. I'm the Deputy Director for Select Fulton. Select Fulton is the economic and workforce development arm of Fulton County government. We work to stimulate development, help companies grow locally, and make sure we have a skilled workforce. Today is the first in a quarterly webinar series which we created to support small businesses during these challenging times. More than 92% of all businesses in Fulton County have 4 or less employees. So it's essential that we continue to provide support and foster an environment for businesses like yours to grow here in Fulton County. We have an exciting lineup of experts that will help us do that today. The first will be Paul Wilson Jr. and Donald Lamar from the Small Business Development Center, also known as the SBDC at the University of Georgia. Go Dogs. The SBDC has really taken the lead in Georgia in providing guidance to small businesses and entrepreneurs and all the stimulus funds coming from Congress and the involving rules and benefits. Today, both Paul and Donald will cover the new stimulus bill under the American Rescue Plan Act and the opportunities for your business to benefit. We also have Mario from SizeUp, an incredibly powerful small business intelligence tool that can help new and existing businesses, everything from ranking your business performance compared to industry competitors locally, discovering potential customers, suppliers, and to better understand the competitive landscape, and to optimize your advertising to target ideal customer segments. This tool is being provided free to the public by Select Fulton and Fulton County government and can be accessed via our website after this webinar concludes. So again, thank you for joining us at Fulton County today. Before we kick off with our speakers and experts, we wanted to start and open with a very special guest and really the originator of the Empowering Entrepreneur series, Commissioner Marvin S. Arrington Jr. He is the District 5 Commissioner for the Fulton County Board of Commissioners. He has a strong passion for community service, especially around the areas of small business and arts and culture. So thank you, Commissioner Arrington, for joining us today, and if you'll open us up, please.
Thank you so much, Samir. Glad to be here with you all for the Empowering Entrepreneurs webinar. I spoke to Samir about, getting this series started, and I told him most of the people that I know aren't really looking for jobs. They already have their own companies. What they need is access to capital. And so this is an attempt to try to make sure that we can help our small businesses in and throughout Fulton County have access to capital. One of the biggest problems is we don't properly capitalize our businesses, and therefore we don't properly give them a chance to succeed. So I'm glad to be here today. I'm glad that we have experts from the University of Georgia, the SBDC, who can talk about the American Rescue Plan and all of the monies that will be available for small businesses. In Fulton County right now is anticipated to receive about $200 million from the federal government as part of the American Rescue Plan. In addition to that, we'll be receiving about another $34 million for rental assistance. So that's about $234 million coming into Fulton County. And guess what? That's really only half of the number coming into Fulton County, because the city of Atlanta will also get approximately $200 million, and they will also get approximately $30 million for rental assistance. So we've got twice as many resources, roughly $400 to $500 million coming into Fulton County as part of the American Rescue Plan. In Fulton County, we're looking specifically of allocating about $5 to $10 million out of our $200 million for small business loans and or grants. And from Fulton County, those will only be only people that live in Fulton County outside of the city of Atlanta will be eligible for that, because those people that live inside the city of Atlanta will need to go through the city of Atlanta to apply for small business assistance there. But there will be many funds that become available. There's also, I believe, a rescue portion or a restaurant portion to help small restaurants And so without me chopping up the bill and too much, we'll turn it over. I'll turn it back over to Samir, who will introduce our experts, who can let you know exactly all of the things that are available through the American Rescue Plan. So again, thank you for being here. My name is Marvin Harrington Jr., Commissioner for Fulton County, District 5. Thank you.
And thank you, Commissioner Arrington, for opening us up and also reminding everyone about additional funds that are coming to the county to provide small business assistance. Remember, last year we provided $3 million in small business loans, 73% of which went to minority and female businesses, many of which weren't necessarily supported by the original legislation. And so look forward to, again, being very equitable in our response as we receive these new funds for small business loans. And with that, I'd love to, again, kick it off over to Paul Wilson Jr. and Donald Lamar at SBDC to talk about the American Rescue Plan Act and how you can benefit your business. So, Paul.
All right. Thank you, Samir. Appreciate the opportunity for us to be here. And thank you, Commissioner Arrington, for kicking us off and leading us in. It's great to see in terms of the government's response from the federal government, down to the local government. What is definitely, everyone knows, been an unprecedented, right, impact on our economy, and specifically also, right, with our small businesses. Of course, we're kind of in this third phase of the stimulus, I guess. Initially, we had the CARES Act, then we had the Economic Aid Act, or Economic Aid Impact Act, and now, right, we're into the American Rescue Plan. So we're going to walk through just some highlights of this particular plan and how it benefits, of course, small businesses and how you can get help directly for your small businesses, whether it be, again, through SBDC or other resources. But right before I do that, some of you may or may not be familiar with the SBDC and what we offer. We are actually funded by the federal government through the Small Business Administration. We have 18 locations around the state. There's about 7 right here in Metro Atlanta. In the city of Atlanta, there's 2 offices, one at Georgia State, that's the team that I lead. And then we also have an office at Morehouse, so it actually just opened last year around, during the summertime. And so, as you can see from this list, this is really just a summary list of the services that we provide from a one-on-one consulting standpoint. So you can meet with the consultant. Right now, we're pretty much doing everything virtually, but eventually we'll get back to face-to-face. But you can actually meet with the consultant, not get charged, right? Because we're funded by the federal government and the university system of Georgia, these services from a consulting standpoint, there is no fee. I kind of joke and tell people it's prepaid, right? It's your tax dollars at work. However, again, you're not going to get an invoice for getting assistance. And again, this is just a snapshot of what we provide. 2 areas that we don't provide assistance will be legal advice and tax advice. So other than legal and taxes, right? Again, almost anything else related to your business, including helping you walk through, what we're going to be talking about today, your EIDL application in terms of your economic EIDL loan or your PPP loan, or again, even some of the other programs that are going to be rolling out, including restaurant recovery. Again, you can get connected with our office or with one of our other offices to get assistance. Now, our team, again, we're at Georgia State. However, we do serve all of Fulton County from the north to the south. So we're spread out across the board. I like to call us, we are the dream team. We're small, but we're mighty. We're actually bringing on board 2 more consultants very soon. So we'll be fully staffed, very, very soon. So again, but right now, today, again, I'm the area director. I have with me my pros. I was going to say something, but it might get me in trouble. I'm going to just say my partner. I'm going to leave it right there. I'll leave it right there. My partner in the SBDC, very experienced, very well-seasoned business consultant, Donald Lamar, and then Alicia Johnson is here. Well, she's not here today, but again, she's our program coordinator, handles a lot of our training and helping to just kind of keep the office running, if you will. And I'm gonna just take a pause. Donald, I'm just give you a few words, and of course you'll have a chance to jump in later, but definitely just to kind of greet our audience, and then we'll jump into what we're here to talk about today.
Well, thank you, Paul. And I certainly want to thank Samir and his organization. We, as Paul had indicated, are just located right there in the heart of downtown Atlanta. And I think, our mission is solidified in the fact that we want to help businesses any way we can. So just the tip of the iceberg deals with a lot of these programs that Paul and I will be speaking about today. But there's so many other resources and services that we provide. I certainly encourage you to, visit our website, call a consultant, work with Alicia, try to come in and see what we are all about. And again, as Paul indicated, I have a very strong background when it comes to government contracting, when it comes to just one-on-one general contracting or general services as a whole. So there's a lot of talent. You need to come check us out. Thank you for allowing us to be here and kind of discuss these things that are very important to your community.
Absolutely. And so definitely, again, as we roll into what we're going to be presenting today, we won't have time to go back and forth with questions, but definitely if you have a question, if we do have some time, we might be able to answer them. And even if we don't answer them today, please, you'll be able to contact us and get your questions answered directly from one of our consultants, even if we can't, again, answer those questions today. And then lastly, I'll say is I'm gonna give a short shout out for the end of this presentation with SizeUp at the end. We had a chance we do a lot of market research for our clients. So we really help them try to understand what they need to understand about the market, about their customers, right? And we do a lot for them. So we had a chance to look at SizeUp, some of their, we previewed some of their tools, incredible tools. So I just give just let you know, stay to the end to make sure that you also listen to the second presenter, because again, if you're in business and you need to understand your market, do some research. Again, they have some great tools that you would be able to utilize, which again, you could also come work with us. But again, anytime we can tell somebody else about doing something for their business, we want to recommend that. So definitely make sure you stick around to the end. All right, so let's jump into this. Again, there's a lot to cover, but again, we want to help you understand what's available to you, again, through the law that was signed on March 11th called the American Rescue Plan. A big portion of that, of course, was focused on small businesses. And so the SBA was directed to make certain changes to some existing programs, which included PPP. You've probably been hearing that over the last year, which is the Paycheck Protection Program, the Targeted Emergency Injury Disaster Loan, or EIDL, and that's what we affectionately call the EIDL, and the EIDL advanced portion of that loan. The Shuttered Venue Operators Grant, which is still trying to get off the ground, but it is in motion. And then a new program that, again, was launched with this particular program was, again, the Restaurant Revitalization Fund, and then also the Community Navigator Pilot Fund. So we're going to, again, dig into some of these details with these particular plans. And again, in addition to that, there's also some other non-SBA programs that impact small businesses. So again, we know Fulton County is large, right? So we know there are different sections or portions of that. So there may, depending on where you're on Fulton, right, you may have an agricultural related business. So there's some aspects of that are connected to it. Emergency rental assistance, small business credit initiative. And again, of course, and there are some extensions of some of the other laws that are already in place, including, again, the CARES Act, the FFCRA unemployment provisions, credits for paid sick and family leave, employee retention credit, and tax exemption. So there's a lot packed in here. We won't be able to unpack all of this today, but just to let you know, within that law and in that stimulus act that was passed, they accounted for a lot of different aspects, again, of small businesses from that standpoint. Again, from the rental side to the just the loan side to the even tax credits, and every business may not be able to take advantage of every single program, because again, some of them may conflict with others. But that's one of the reasons why I say come meet with an SBDC consultant. We'll help you look at your overall business strategy and your overall business condition right now, and look at all the programs to see which program is most relevant for you. All right. So we're going to get into a couple of these specifically. So let's talk about the changes to the PPP. There you see, again, funding was increased in a major way from that standpoint, from 7.25 billion up to 813 billion. It also expanded, additional coverage of those even nonprofits. So if you remember or not, and some of you may be on here are a nonprofit. Nonprofits are actually eligible to pursue PPP loans. And so there are, again, some additional categories under that nonprofit aspect in terms of those who would be eligible. Also, there's some other types of organizations that were not eligible before that can take advantage again. And if you're connected, if your business is related to internet publishing and you're in NAICS code 519130, it's now eligible where before it wasn't in terms of applying and qualifying for the PPP. And the Extension Act, which benefited a lot of businesses, from the Economic Aid Act that was passed at the end of December, PPP would have ended. The new PPP, what we call PPP 2, or the second draw of PPP, would have ended on March 31st. I'm sorry, but now it was extended to May 31st. So if you're thinking that it's too late, it's not too late. You still have another month and a half, about 6 weeks. But we would encourage people to get on this ahead of time, because how that deadline works is that the lenders have to provide the PPP application to the SBA by May 31st. So what many of them previously did, and will probably do again, is they have to cut off their deadline before May 31st, maybe even up to 10 days, because they want to make sure that every application has been submitted to them. They have time to process it before they send it to the SBA. So keep that in mind. May 31st, yes, is the deadline, but really banks and other lenders, they've put in an artificial deadline earlier than that, so that way they have a chance to process and submit every application that they receive on time to the SBA. All right. So one of the things that was a challenge on the first PPP and even the second draw initially was that PPP was specifically for, again, how many W-2 employees that you had, right? So you could have had a company that had 30 1099s, but you couldn't count them in your calculation towards how much PPP you received, because again, it was strictly based on W-2 payroll. So what this ruling, the IFR number 4, you don't need to know about that, is it allows people, it adjusts for that and helps you. And now it's going to accommodate for those businesses that are set up in that other type of business structure, to now allow you to count not W-2 payroll information, but now you can actually use some revenue related information. So this line 31 and 37 relates to your Schedule C tax return. So you can pull that number and use that to help you qualify for PPP. Whereas before, you could only do your personal income. Again, if you were the business owner and you had hired, right, all 1099 independent contractors, now, again, there's a different formula that you can use that will allow you to qualify for additional, a higher amount of PPP from that standpoint. Again, if you do have employees, again, this relates to W-2 employees, and you choose to use gross income line 7, again, there's some other things you need to subtract out of that in terms of the final number that you would submit that would help to qualify you for that number. Again, I know this may sound a little confusing, but again, we can walk you through what that actually looks like and even look at your documents and help you determine what that number needs to be. So again, I don't want to get into weeds too much because I know we have limited time here, but just let you know, again, the bottom line on this is, the good news is that, again, if you're a business owner and most or all of your people that worked for you were 1099s, now there's a different way for you to calculate what you submit that will bump up or increase the amount that you could receive for PPP. All right. And so again, again, this is just a summary document to let you know what SBA forms are required. Again, if you didn't participate, also I'll just say this: if you didn't participate in PPP the first time around, you can absolutely do it now, right? So there's some people who didn't apply, or maybe didn't qualify, maybe things have changed. Again, you absolutely can do your first round now. And again, if you're in the position of you did PPP, the 1 is what we're calling it, and you qualify for PPP 2, again, we can walk you through those steps. There's specific forms, and we can help you, again, pull that information together to make sure that you're ready by the time you're ready to go apply for that loan. All right, so let's talk about the targeted EIDL program. And this, of course, was implemented in the second stimulus package, where, again, companies who received the initial targeted advance, which was somewhat called a grant, right? That when you were applying for the EIDL loan the first time, you were able to receive up to $10,000 based on, right, certain qualifications. And in that case, again, at that time, it was all based on how many W-2s you had. And so, and if you're the owner and didn't have any W-2s, right, you only got 1,000, but then that 1,000, again, if you had other W-2s, was multiplied. So, so some additional things that were added to this program. Again, they added an additional $15 billion, which is great. And they added some other things in terms of who was able to get increased. If you remember before, those in that, again, second stimulus act, people who met certain qualifications in terms of a negative revenue impact, where your business was physically located, right? Those businesses were contacted by the SBA, and they were increased from whatever amount they had, whether it was 1, 2, or 3,000. They were automatically increased up to 10,000 under that advanced program. So again, there's new targeted businesses that also had a little bit of priority. Again, make sure you couldn't employ more than 10 people, but also you suffered an economic loss of greater than 50%. So there was an additional supplement payment of $5,000 to those businesses. So again, this is not something that you can really apply for. You would have been already contacted by the SBA. But if you have a question and believe that you met these qualifications and maybe they somehow missed you, there is some contact information from the SBA on the EIDL portal that you can reach out to, or even if you've already received certain emails, there's probably some contact information within those emails to help you determine whether or not, again, you meet this criteria and if you should receive the additional funding that was connected to that EIDL advanced program.
Hey, Paul, let me add something just very, very briefly
Absolutely.
here related to that. Be sure that you validate the email, making sure that it's coming from the SBA, because there's been some news published around a lot of fraud attempts where people are phishing, so to speak, sending out some of these fake SBA emails so that they can have access to your information. So be very careful to make sure that you review the email is coming from the SBA as it relates to, especially these targeted EIDL programs where they're reaching out to you, and it's a matter of you following the process to make sure that you can benefit from the program.
Absolutely, Don, and thank you for bringing that up. I'm just going to add on that with two things. One is we are aware at Georgia State they actually have one of their departments who actually does a lot of research on the dark web and where stolen accounts, even and we have seen it with our own eyes, where on the internet, on the dark web, they are selling people's login information and have actually been able to apply and receive PPP and EIDL loans from stolen information from businesses. So this, unfortunately, it's real and it's happening in real time as we speak today. So definitely you want to make sure you guard your information. Be careful about the emails that you receive and what you click on in those emails and how you give your information over the internet. Again, EIDL, right, EIDL can only be applied through the SBA. So you don't need to go through somebody else's website to get to the SBA. Go straight to the SBA page. And on PPP, you can only apply through a lender. There's no reason to go through a third party to get to a lender, right? So just be really, really careful with that. In addition to that, there's some other businesses out here who are charging people to help you apply. Again, it's a business model, and if they can do it, great. However, I discourage you from using someone like that when you have a free resource available. And we're not just the only ones. Again, I'd highly recommend you contacting us, but even if you find other small business organizations that are providing assistance, use what's free and available. And again, you don't have to, you're not required to pay somebody. I've heard individuals starting up from 20 to 25% of the value of the loan as the fee for helping them. So please don't do that. Again, when you can save that money and utilize it again for your business, which that's what it's for. All right, so let's talk about the shuttered venues operators grant. We know the SBA opened that portal about a week and a half ago, and then had to pretty much shut it down the same day, just because I think probably because of just the crusher mass of people that were coming to apply to that program. So although you may qualify for this program, you can't apply yet because again they're probably restructuring the program from that standpoint. Again, this program was initially launched or again through the first stimulus act, and they just had to make some changes from that standpoint. Also, before it was limited. If you had applied for PPP and SVOG, you could only choose one or the other. You couldn't do both. But now they've eliminated that restriction, so you actually can apply. It's just that your grant may be reduced by the amount of PPP 1 or 2 that you receive, right? So you can definitely apply if you again are fit that category of a shuttered venue. And again, those are museums, independent movie theaters, other type of entertainment venues, and other businesses that are associated with that type of industry. And so again, you can apply when it opens for the shuttered venues operators grant. But again, if you apply and receive PPP 1 and or 2, your grant proceeds may be reduced by that amount. But at least again, you can apply for those other programs. Right. As I said, we're here just to hit some highlights and talk about some changes. Because again, we know there's a lot packed into these programs, and we can't get to all the details, but we definitely want to give you at least stoke your interest to know, okay, let me go follow up as needed. All right, so this is a new one as it relates to again the new act that was passed in March, the Restaurant Revitalization Fund, and we know so many restaurants, right, have been impacted to an extensive level, right, even beyond what other types of businesses have been impacted. So again, this was a new program that was implemented again, specifically for that industry. Again, appropriates $28.6 billion for that, and again, at least $5 billion will go to entities with less than $500,000 in gross receipts. So there was a targeted focus on really small restaurants, not just the big restaurants. So they carved out a portion of that from that standpoint. And then the balance, I guess the rest of the 23 will be distributed in an equitable manner by the SBA and based on how they define equitable manner. So again, this is a covered period. So starting February 15th, 2020 ends on December 31st. So what they're looking at is your restaurant had to have been in business and operating on February 15th, 2020, right? So if you started after that, you would not be eligible again for these funds. So you had to have been in business February 15th or earlier, and they're going to look at your finances from again February 15th up through December 31st, again, or a date set by the SBA not later than 2 years after the passage. So it's possible, I guess, they may look at that sliding that date in terms of what that happens. But as of today, but this stuff kind of changes. It can change from day to day. But as of today, again, it's going to look at your finances from February 15th through December 31st, unless they come back and decide to adjust that probably to a later time. And I don't think it's going to be earlier than or later than February 15th, but who knows? All right, so let's talk about eligible entities in terms of, again, who's going to qualify. So this is a long list here. So we got restaurants, food stands, food trucks, carts and caterers, saloons, inns, taverns, brew pubs. Looks like they're going to try to cover as many different types of eating establishments and restaurant establishments as possible. And again, and then even this last statement, or other similar place of business in which the public or patrons assemble for the primary purpose of being served food or drink. And I think that's key there at the end, says the primary purpose, because there's a lot of entities that do other things and they also sell food, right? And you can think of a few of them. So I think though this is not on those who just happen to sell food, this is those businesses whose primary, again, focus is on selling food and or alcohol. Also that covers that from that standpoint. So again, priority in terms of when this opens, is not open yet, but when it does open, the priority of those first 21 days are going to be women-owned businesses, veteran-owned businesses, and disadvantaged business entities, which of course would include a lot of minority-owned businesses from that standpoint. So again, they're going to get the priority in terms of when people are applying online and as they're evaluating the applications. Not that the others won't be eligible or receive money, they'll just have to wait longer to get theirs beyond that first 21 days versus these other types of businesses. All right, so in terms of which ones are excluded, again, if it's an entity operated by a state or local government, I guess I'm thinking of something like a convention center, right, or something like they sell food, right, or do other things too. But if it's operated by a state or local government, again, it wouldn't be eligible. If it owns or operates more than 20 locations, so again, they're targeting smaller businesses. So again, if it's more of a franchise, and let's say the franchisor owns all those locations, it wouldn't qualify. If you have a pending application for shuttered venue operating grant, so if you already applied for the SVOG, which is a program we talked about previously to this one, again, you won't be eligible if your application is pending or if you're a publicly traded organization. Now, again, you might be able to, if you submitted your SVOG, it's possible, I guess, you could potentially cancel that application and get this one. But I guess it's all depend on maybe how you calculate which one you think that you might receive more from. Again, so yeah, it's going to be defined on pandemic-related revenue loss. So it's going to be the difference between 2019 gross receipts and 2020 gross receipts, and the grant is going to be based on, again, what that revenue loss was. So my understanding here is that if you made in 2019 $450,000, and in 2020 you made $200,000, that you would conceivably be eligible for a $250,000 grant, right, to make up the difference between what you lost between 19 and 20. But I would say it's probably subject to change at some point, but at least that's the rules as we understand them now. And again, the grants are limited to $10 million or $5 million per location for affiliated businesses. And again, those numbers, right, definitely would cover larger businesses that still qualify, but again, they're larger, but their grants would be limited to a certain level of losses. Right. So so you got for entities that are not in operation for all of 2019, there's a calculation. So if you started in July of 2019 versus all the year, there's a way to actually, what would that number have looked like over the entire year to actually get that calculation. So again, if you weren't in business for the whole year, I don't want to go through all these details, but there's a way that a formula that they will calculate from that standpoint, what your loss would have been conceivably, again, a prorated amount, I guess you could say, if you had been open for the entire year. And then also, again, for entities open between January 21st and March 10th, the grant will be equal to the amount of payroll incurred from that standpoint, less any gross receipts. So again, if you started on January 1st, 2020, hey, remember January 1st, 2020? Remember how excited everybody was about it's the year of double vision and all this great stuff, right? And our vision ended up being a little bit different than we expected it to be. But but again, so for those entities that literally just started the first of the year, their calendar calculations would be a little bit different from that standpoint. It's going to look at January 1st of 2020 through March 10th of 2021 of this year. And again, it's going to calculate a little bit different number, not revenues, but again, it's going to look more at the payroll that was incurred during that time. And for entities that have not opened yet, but have incurred expenses, the grant will be equal to the amount of payroll included. And again, the SBA has the option to establish a different formula for each of the above cases. That's why I said this is written in pencil right now versus in pen, because again, there could be some changes coming to this as we have seen with other programs also. So that's not a surprise. And again, just remember on this too, just like SVOG, pandemic-related revenue losses will be reduced by any PPP 1 or 2 received by the entity. So again, if you got 1 and or 2, that would reduce the amount of the grant that you would receive from that standpoint. All right. Here's what you can use the funds for. Fortunately, they made that very flexible. Again, it could be payroll, rent, utilities, maintenance, supplies as in PPE or cleaning materials, food and beverage expenses occurred in normal business practice, operational expenses, sick leave, and again, so it covers a lot of flexibility in terms of what you can use. But if you fail to use the funds or cease operations before the end of the covered period, you must return unused funds to the Treasury. So don't get the money, shut your business down, and think you can just walk away with the money. They will come looking for you. All right. So we don't want anybody to get in trouble. So as you're waiting for this to kick off, a couple things you want to go ahead and do that way you can get it out of the way. You are going to have to register a business with the federal government on sam.gov. There's a system and a step to do this. And there's a couple things you're going to need. If you don't already have a DUNS number, you're going to need that. You're going to need that in order to register on SAM. And then when you get to SAM, one of the documents you're going to need is a notarized letter to grant access to new entity administrators. And we can talk to you in more detail about what that is. Unfortunately, there is a training video on the SBA website on how to register, because there's 2 different ways about on SAM. SAM is also, again, if you're not familiar with sam.gov, is also the platform that if you want to be a federal contractor in terms of selling your goods or services to the government, you also go to SAM, right? But there's 2 different paths when you get to SAM. One is for those people, again, they want to become federal contractors, and that's great, but that's not you if you just want to get this grant, right? So, but when you get there, again, you'll see the fork in the road, if you will, online to say, okay, which path that you go down just to register, again, for the grant, but also SVOG actually is also required. It requires a SAM registration too. But again, if you aren't able to navigate that yourself, that's one of the things that SBDC can also assist you with from that standpoint. So again, this slide right here has a lot of details on it. And we're more than happy to make this presentation available, Samir. So I'll send this to you when we get done. And again, if you want to send this to the audience, so that way they can refer back to this. But all this is a quick summary snapshot of the different programs that have been established since the CARES Act last year in the spring, the Economic Aid Impact Act in December, and now the American Rescue Plan. So that way you can also see all the programs side by side and help you kind of navigate in your decision making as it relates to, again, which program is most relevant and how to, again, several of these programs, you can do multiple at one time. But again, also, of course, some of them, if you receive funding in one, it does impact some of the funding maybe from the other. But again, we're here to assist, to help you just kind of navigate through all the minutia of all of the terminology. Again, there's a lot of acronyms that are on here, more acronyms than we can probably remember at one time. But just want to let you know, again, we can be your tour guide. We can really help you understand how to get through this, and even do help you with even some of the financial calculations, so you can kind of project what you may receive, kind of based on what we know today, right, in terms of the different rules and regulations that are tied to these different programs. All right. I'll touch briefly here also on the emergency rental assistance. Again, so this funding is being made through $21.55 billion through 2027. It's a little bit longer. Again, as Commissioner Arrington mentioned earlier, these programs will be administered at the local, state, and county levels. Again, they're going to pay for rent and utilities for eligible households, where again, one or more individuals within the household has qualified for unemployment benefits or experienced a reduction in household income. So there's some qualifications here, of course, to receive the rental assistance. And again, one or more individual within the household can demonstrate a risk of experiencing homelessness or housing stability, right, if the financial situation doesn't change. And of course, another potential eligibility would be, again, household qualifies as a low income family, again, based on total income. And then also we have a state business grant initiative. Again, $10 billion in funding. is prorated to states based on the population. So in Georgia, the current SSBCI is being administered by the Georgia Department of Community Affairs, and they currently are running two different programs. So it's the Georgia Loan Participation Program. It's called the GALPP. And so the state may purchase up to 25% of a loan range from 100,000 to 500 million. Current cap is due to 200,000. So basically, the state government has the ability to back, even with the second program, or guarantee that loan. So it's still going to go through a bank. But again, this is a program that the bank would utilize to assist you. So again, this is going to be different from PPP and EIDL. But again, if you need a loan and either you qualify for those or you didn't, this may be another way to get some funding. And again, with the guarantees that are in place, again, lenders, conceivably are going to be more willing to do these loans because of the backing that's coming through the funding, right, that's supporting it. So again, there may be some other options that you have to consider, even if you've exhausted all the other options, or in some cases, maybe you didn't qualify for all the other options. This is an additional loan program, again, that's being assisted and administered through the state from that standpoint. And of course, some of these programs could be changed due to ARP funding that may come in. Again, I'm winding down, just going to hit a couple more things, and I'll be I'm gonna get stopped on time, so that way we can kind of be able to transition. So again, all current programs, CARES Act and unemployment provisions were extended through September 6th of 2021. And again, was also extended through the end of 2021, credits for paid sick and family leave, as well as the employee retention credit, which we didn't talk about much here. But if you have retained your employees, there are some great tax breaks that you can get. Again, on that one, unfortunately, we can't help you because it's tax related, but definitely talk to your CPA, please, because you can actually get, in addition to all the great loan provisions and some of that forgiveness, there's some other actually employee tax credits that you can get if you've maintained your payroll or whatever your payroll is right now, that you can actually, again, get a tax break from that standpoint. So I'd say we have some stuff here in terms of summary tax issues. Again, don't want to get too much into this, but again, you will have this presentation, and we're more than happy to help you at least talk through some of the areas where we were allowed to talk to you about it, but in some of the other areas, we can't go into depth. But one of the benefits of this is that expenses paid by PPP funds can be claimed as business expenses. Before, you weren't allowed to do that, and now you are. So if you use PPP funds for the expenses, you can actually then also deduct those expenses. Also, the debt relief of principal and interest will not be treated as income. So the forgiveness that you receive, again, the way the law was originally written with the CARES Act, you would have been penalized as additional income. Fortunately, they eliminated that provision, so there will be no that it won't be treated as income, and you don't have to worry about that. Also, again, we talked about PPP recipients are able to claim that employee tax retention credit. And again, a few other things here. I don't want to rush through it. However, just let you know, there are some tax benefits in addition to, again, some of the grant programs and the loan programs that are out there for your small business. So again, take advantage of everything that you can get your hands on. Again, this is just more details about some deadlines. I'm gonna pass through this because we're pretty much at the end of my time. But please, if you need help or assistance, go to georgiasbdc.org. And if you go there, you can click on locations and find out where every single office is in the state. Of course, our office, again, is located in Atlanta at GSU, and we're more than happy to assist you. So thank you, Samira, and we'll kind of pass it back over to you at this time.
Thank you, Paul and Donald, for covering the presentation. I've seen, again, many iterations of this kind of evolving presentation as the legislation continues to evolve, and it's very interesting, especially to see on the back end how some of the tax relief is starting to line up with the needs and challenges that we were starting to see on the ground as people were receiving benefits from the PPP funds and the EIDL grants, but didn't want to necessarily be penalized from a tax standpoint. So I think kind of the message to everyone is continue to track the evolving nature of these legislations. Again, I think Congress is working to find out what are the things they didn't think of and how they can fix those And again, the SBDC has done a really great job in capturing those nuggets and sharing those with individual businesses. We will definitely share this presentation after the fact with the group watching today, and also a recording of it so that they can share it not only with themselves, but with other interested parties that weren't able to join today. Just briefly, one of the questions that we did get was around sole proprietorships and 1099 workers, which I think you covered. And again, they can take advantage of these programs. And I think the new nuance is that there's different ways that they can take advantage of the program based on, again, previous tax forms and the like. So again, we'll share that after the fact, and thank you for joining us. Now we'll kick it over to Mario over at SizeUp to tell us a little bit about the SizeUp tool at selectfultoncounty.com and what it can do for your small business. So thank you, Mario.
Great. Great to be here with all of you. My name is Mario Ubalde. I'm the Director of Customer Success with SizeUp. And I know that I'm here to demo the application. But before we get started on that, I want to talk a little bit about the value that SizeUp is going to give you as a small business or an entrepreneur. So there's really three main points that I want to talk about in terms of SizeUp. So the first and most important one is we are going to give you via SizeUp, via the investment that Select Fulton County has made, access to the same type of information that your big businesses are using. Whether it's your franchise restaurant or your multinational corporation dealing with logistics, we're giving you the same type of information. The difference is those type of companies either have in-house business analysts that they're paying six-figure salaries and benefits to, or they actually are paying millions of dollars to your big consulting firms like Deloitte and McKinsey to provide this information. You're going to have access to this for free. More importantly, we're going to give you access to this information at a time that works for you. Why? A lot of people say small businesses are so busy running their business 9 to 5, they don't have time to engage with the services that are available to them. I'm guessing it's not even 9 to 5. I'm guessing it's more like 7 to 9. And so SizeUp is available on the web 24/7. And what we see is a lot of small business owners, a lot of entrepreneurs are engaging in this type of information at the time they have available, which is in the evenings, very early in the morning, or on weekends. And SizeUp's going to be available for you at that time. The third and most important thing is that SizeUp is simple to use. You don't have to have a degree in quantitative analytics or an MBA to use that, but we are still going to give you that powerful information. And so I'm going to show that to you now in the demo. So one of the first things that I want to point out is that SizeUp is available right now. It's on selectfultoncounty.com/SizeUp. And we're only going to ask you 2 questions to get started. The industry that you're in, or the industry that you're thinking about getting started in the case of an entrepreneur, and where in Fulton County you're thinking about doing your business or where your existing business is. Now, I mentioned that this is simple. So 90% of businesses don't know what their SIC or NAICS is. You're going to find that out when you work with Donald and Paul, and they're going to help you, and it's important to know. But to get started, we're just going to say, hey, are you in a restaurant, right? And you can look at all restaurants. Maybe you want to go dive a little deeper and say, I'm looking at Italian. Or maybe you want to be even more specific and say that you're in the pizza industry. All you have to do is use simple language, the way that you would describe your business to someone on the street. And you can do everything from machine shops, right, to coffee shops. And then it's just as simple as choosing where you want to do your business. In this case, we could choose any city in Fulton County, but let's choose Alpharetta. And normally I would ask questions about what you think the average coffee shop is. Because we have limited time, I'm going to fly through this, but invite you to go online after the session is over and play with the scenarios yourself. Maybe you're doing back of the napkin analysis, right? You don't have an expert person telling you how much the average coffee shop is going to make. Maybe you're assuming, well, I'm going to sell a couple of cups of coffee a day, 1,000 cups of coffee at $1 a cup. I'm going to make $365,000 a year. That seems like a lot of good income. But for the Atlanta area, for the city of Alpharetta, it's actually way below par. Your average coffee shop is making almost $800,000. So right off the bat, the lens of data via SizeUp is allowing you to see performance across different categories, different revenue numbers. Oh, sorry, I just hit the wrong button there. And to contextualize your performance of your business. Now, you notice we're not going to tell you that these are recommendations, they're considerations. Each small business is unique. And so we want to provide you the information you need in the unique location that you're doing business to understand how your business is performing. You'd also want to see what the industry trends are in coffee shops. You think of the Starbucks on every corner. Maybe there's not room for more coffee shop growth, but you can see nationally, there is still coffee shop growth. And even at the state, metro, county, and city level, there's still coffee shops opening. Why does this matter? If you want to get into coffee shops, it's probably a good idea. If you were getting into movie and DVD rentals, you'd probably see a line going all the way down from the top left down to the right as more and more people are using streaming services. As a small business, it's sometimes hard to know if your salaries are competitive. So we can put in $20,000, which seems like that's not a lot of money. That's very competitive in the coffee shop industry. And if you're Joe's coffee shop, you can't necessarily go to Joanne's coffee shop or Max's coffee shop and ask them how much they're paying their employees, because that's part of your competitive advantage. And what really constitutes a small business? I think we can agree that 10 people is a small business. Through the lens of data, that's actually a very small coffee shop. You're actually 2/3 the size of the average coffee shop in Alpharetta, which is a little bit larger than the average coffee shop in the county. Maybe that slightly longer commute means they need just a little bit more caffeine coming from there. Now, we've been asking questions at this point and then giving you information. Now, SizeUp has super crunched millions of data points to provide you more information without even asking you those questions. We're going to talk about the cost effectiveness. Yes, you're making less money, you're paying more money to your employees, but your cost effectiveness is very good. Maybe that's the model for your business. Maybe you have fewer employees that are higher trained, you make a little less revenue, but it all balances out. That's your business plan. So we could go through a lot more categories here, like local turnover. You might be expecting to lose around 3 employees in this industry. If you're losing 2, that's a testament to your business culture. We could also look at healthcare costs, and I'm going to fly through this because we only have a little bit of time left, as well as workers' compensation. But instead of focusing on these, I'm going to focus on the summary view. So the summary view, when you click summary view, is going to give you a dashboard of how your business is performing. So if you want to run through scenarios to figure out how possible increases in revenue or increases in salary or change in number of employees affects your overall profitability or cost effectiveness, you can do that. So that is the first leg of SizeUp, giving you information about how your business or your prospective business is performing against industry averages to help you optimize your business decision-making. Now, there are a lot more tools with SizeUp. One of it is the competition tool. So this is going to show you all of the other coffee shops. And as you know, you can get coffee from other places. You can get it from diners. You can get from bakeries. This allows you to define what you see as your competition, not just coffee shops, but any other businesses that you think compete with your product or your service if you're looking at a different industry. You could also look at customers. Now, because of the short time, I kind of pre-populated this one right here. And actually, I switched from coffee shops, which is a business to consumer example, to a business to business example. So now we're looking at roofing contractors. So here's a list of all the roofing contractors in Sandy Springs, Georgia. Notice I changed to a new city. And we're going to look at their customers. Who would you go to as a roofing contractor? Well, we're looking at single family house construction. Maybe we might be even looking at other types of construction. Maybe we're looking at residential or industrial or commercial. We can define the business and provide you the results based on your business plan. And then we're going to map all of those information. Why does it matter? Because it turns what's a cold call into a warm call. If you're trying to reach out to these people, you can go ahead and look at their website, find out more information about them. And again, if you are a roofing contractor, you also need to know not just who you're selling to, but who you're buying from. You might notice some hometown companies like Home Depot, which is a place where you can go get your roofing supplies or your lumber or your shingles or your metal roofing, depending on what type of roofing you're looking at. And we can see all of this in terms of the spatial characteristics, where those suppliers are, where your customers are, and where your competitors are. The third leg of SizeUp is the advertising tool. So I have 1 more minute, so I'm just going to blast through this and show you a little bit of information. But this is the advertising tool, and it's so critical for small businesses. The idea of having a budget for mass marketing or anything else just doesn't work that way. We have to target and optimize our advertising dollar. So I've switched from retail to more of a B2B model, and now I'm looking at dentists. So this is where most people are spending money on dental services in and around the Alpharetta area. Now, maybe I'm showing you right now total revenue. So this is literally the Jerry Maguire, Rod Tidwell, show me the money way of advertising. Where is the money? Maybe I'm just out of dental school, I'm starting up my own clinic. What I want to identify is underserved markets. And not just underserved markets, but I'm actually going to look at over 20 miles of markets because I offer special services for family dentistry. So I'm going to want to identify areas that have a lower median age. And also we've got nitrous. So the kids who are nervous about shots, but it costs a little bit more. So I'm going to target household income of over 50,000. All of this information is going to be super crunched in just mere seconds and show you the information of the areas that you can advertise to, both online, so you can go to Google AdWords or Apple iAds or Facebook, buy ads matching the characteristics of this, or you might even advertise offline, right? I'm gonna find a bus route that goes here, a billboard. I'm a dentist, I'm gonna advertise on the back of grocery store receipts. So as people are picking up that candy that's gonna rot their teeth and make more business for me, I can target specific grocery stores in these unique zip codes. So I'm 1 minute over, and I'm just going to show you one other feature that I invite you to delve into, which is the demographics feature. Now you've seen this before, right? These are the demographics of Alpharetta or whatever. We can also do it around an address, drive time reports or radius reports. But let me show you something really cool. If you think that you know your business, you can go ahead here and drag this icon around whatever you think your trade area is, whatever unique compute patterns you have, whatever blog you want to create and show to your therapist during the pandemic and let them remind you of what this looks like for your little test. So this particular blog, we're showing you exact population characteristics of this shape. And we could do that for other characteristics too. We could go ahead and look at labor force, because maybe you're trying to hire people with very special characteristics. So that's what SizeUp can do. And I'm only 2 minutes over, so I'm going to click stop and turn this back over to Samir. But we invite you to visit Select Fulton and take a look at this application whenever it's convenient for you, because it is available for free 24/7.
Thank you, Mario, and I apologize for putting you up against the clock. I've seen your presentation 2 or 3 times now, and I feel like we could always go on and on, but we definitely want to just give people a quick taste of what the SizeUp tool can really do and really let them go out and explore on their own time, the different metrics and the data that they're able to pull. And like you said, what's so powerful about it is you're able to customize everything really granularly, not only to a local level, but very specific to the business. And we will have kind of ongoing listening sessions in partnership with the North Fulton and South Fulton Chamber of Commerce to do kind of more in-depth understandings of how to use the tool and presentations and the like. So thank you for sharing that. And again, everyone, it's on selectfultoncounty.com/SizeUp, and it's live currently. So this really concludes our program for today. I want to thank all of our speakers from the SBDC, from SizeUp, and especially our kickoff speaker, Commissioner Marvin S. Arrington Jr. Of the Fulton County Board of Commissioners. I hope you can see from the presentation and discussion today that Fulton County is very committed to supporting our small businesses, especially under these difficult circumstances. We will provide kind of a post review to everyone who participated and was on the call today. That includes the presentation you saw, a recording of the discussion today, so you can go through, again, Mario's brief overview of the SizeUp tool. We'll share a link of the SizeUp tool on selectfultoncounty.com if you're not able to access it right away, and any additional resources that the SBDC is pushing out. We'll also make sure that the list today is included on any communications we send out, as Commissioner Arrington mentioned, as we develop our small business loan program going forward. And we will hold another webinar series towards the summer month. Likely in the June timeframe, we'll invite ACE, which is Access for Capital. They were our small business activator originally. They're a CDFI here locally, to talk about additional resources and capital that's available to small businesses outside the American Rescue Plan Act. And again, feel free to connect with us at selectfultoncounty.com. So thank you again for everyone for joining us today, and have a great afternoon. Take care.
Thanks, everyone.